This is Jack from Alpha Charts with a state of the market video. Today is September 24th, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. If you haven't followed me on Twitter yet, at Alpha Charts 365, that's where you're going to get my current information all week long. Lots of stuff that I post. So check that out at Twitter at AlphaCharts365. All right. Also, there'll be a link below for that Twitter account. Starting with SPX. We're in a downtrend, and right now on Friday we retested the June lows, right? And now look how far we are extended from these moving averages. So it was a brutal week. I'm going to go to the weekly chart real fast. And look at that. Down 4.65. The prior week, down 4.77. In the last 2, 4, 5, 6 weeks. In the last 6 weeks, I mean, the market dropped 16%, right? Absolutely brutal. Going back to the daily chart now. Again, look how extended we are, right? Just like here. Look how extended things got here. Not saying that they can't go a little bit lower, but that being said, I think it's likely that we get some sort of mean reversion type bounce into the moving averages, maybe up into the screen area, who knows, but that's my expected, something like this, and then potentially like that, right? Lots of forces pushing to the downside right now, and it's very possible. Again, it's got to take out this low, this 36, call it 36.36. What's that low there? 36.39, something like that. Low there was 36.47. Yeah, so if it takes out 36.47-ish, I think that things get a lot nastier. Very, again, within a smaller pattern, within a much larger pattern, very toppy looking. Nothing here says bull market. It just doesn't. Again, can we get a bounce? And do I think we're gonna get a bounce? Absolutely. It may be a great bounce to get out of a position if you're in one or we're stuck in one. There's no reason to think that this is the one that's going to shoot higher, right? Risk management. All right, moving on. 1.72 on the RSP, the equal weighted, 1.68, so roughly the same. Again, undercut this area, and again, I would expect a bounce here, even in equal weighted, but this general area right here would not be shocking for it to come all the way down to get another 11% or so. Will it do it in a straight line? Absolutely not. Like I said, I expect a bounce and then maybe one more move lower. Okay, RSP. Move on to the Qs. So, again, lower highs, lower lows all over the place. Let's go weekly on the Qs. Kind of see a little bit more clearer. I think this is going to be the next potential area after the bounce. Again, when I say after the bounce, I mean, this is my expectation. Doesn't mean it's going to happen. But this trend line on the weekly chart, you can see I've kind of highlighted this now a few times. I think it's the next big area to watch because it's held so many times in the past, right? 2010, 2015, 2016 it held. Even if you count here, you could count here, right? 2018, 2020, and maybe 2022, right? Maybe November or something, right around the election time, maybe we hit it. Who knows, right? Who knows? But eventually, if we start moving that way, that's the area, and then this horizontal support here. But again, this trend line is something to potentially watch, right? Again, this is just illustrative. But before we get there, I kind of expect a bounce. Don't know how strong or weak that bounce will be, but I'm expecting some sort of bounce. All right, equal weighted. Again, right into this particular area, extended, same like we've talked about. And if it does break below this area, another 20% on the equal weight. That's going to be devastating, right? If it gets there. I'm not saying it has to, but let's be aware of the potential risk in the market right now. Again, short term bounce, long, medium term lower, longer term markets go up. All right. Looking at IWM. So this has been super important area, right? Held here. And now where are we now? We are right there. Again, crazy extended. My expectation, I was expecting maybe even on Friday for the bounce. It didn't happen. It got even further extended. Let's go to the RSI real fast. Here's the RSI. Look at 18.3. All the RSIs are severely oversold. Again, so the bounce is expected. You see, I'm just going to move this down here, and I'll move this down here, right? So some sort of bounce, then move lower is the most likely scenario. Again, all the 50 days are flattening to declining. It looks like trouble. I mean, it looks like trouble, So again, if we get the bounce and you're stuck in a position, you gotta decide what you want to do with it. What's your time frame? Here, IWO, small cap growth. Didn't quite take out the bottoms that we saw in the other ones, right? It hasn't come all the way down here, but still way extended to the downside. Maybe, something like that. I'll try to make it right, something like that, and then maybe down there, right? And so from here, I mean, that's a huge drop, another 20% small cap growth. That is what causes capitulation, right? And we'll talk about capitulation in a little bit, but that's pretty bad. All right, let's keep going. Mid caps, just to make this complete, super, super, super extended to the downside. Let's go ahead and do that. I mean, there's some support here, another 10%, which actually would be better than the other one indexes. And you see the moving averages actually look a little better on the longer term, but still, this is rough, right? This is rough. All right, let's go to this XLF, because XLF is really interesting right here. I'm going to go to weekly chart. Now, I've showed this before many times. This is a 2007 highs right here, right? 2007, 2018, 2020. And now look where we're at. Here, retesting it. There's also the 200-week moving average that's right there as well. So if XLF loses this level, that's where things, I think, get really nasty. And, we're right there. I expect a bounce here. I mean, let's go back to the daily now. Like, extended from all the moving averages, I would expect a bounce. If it breaks out down from here, breaks below these levels, man, oh man, I think that that the market has another strong leg down, maybe very swift, right? Maybe it's going to try to get that leg in over the next, 4 to 6 weeks, maybe before the elections, right? And maybe that sets up for a beautiful November, December bounce, right? That's very possible. Let's keep open mind, right? It's not going to be going down forever. But the next 6 weeks or 5 weeks or 4 weeks leading to this election, I think that could be a big issue right now. But let's keep looking at the other indicators. SMH. Again, just like all the other ones, extended to the downside, looking bad. Next level down 20%, right? Can the market lose another 20%? Absolutely, right? And then it'll be top to bottom on SMH. Let's just see what that is. 50%. That would be a strong bear market, right? And I think we're in a strong bear market. 50% retracement SMH. Ooh, that'd be big. But then there's opportunities that will rise afterwards, right? That's where the opportunities come from. Transports got demolished. So look at this. Leading the way to the downside is transports. What's that telling us? They're expecting economy to slow down, shipping and transportation to slow down. And again, it's the equal weighted index. So it's not just FedEx affecting this and UPS. This is all transports. That's a big deal. Again, extends to downside. Well, now this area becomes potential overhead supply, right? Maybe comes up and test it from the other side. And that's what I would expect there. Again, transport's already breaking down, leading to the downside. That looks bad. And then looking at home builders, again, looks bad. Didn't quite test the lows like the other ones did. But we got a little movement. Yeah, another 15% down here. And top to bottom. I mean, when you look at home builders top to bottom, you're talking about 45, 46%. And this is, let's go to a weekly chart so you can see this. This is literally since they were created in 2006. That's where this comes from. It was retested again in 2018, 2020, just like the financials in a lot of ways. But financials already testing this, home builders aren't. So this would be the next significant area. All right. So ETFs look really bad. Transportation's leading to the downside. Financials on the cusp. And housing and semiconductors both look very weak. Let's look at some internals now. I want to just take off my moving averages so things look nice and clean. Right? We like clean charts. Perfect. All right, here we go. Look at the VIX. So here's your VIX. 30, right? It's basically 30. It's extended. So, but it hasn't quite gotten to, this area yet. This is where we really see some, I want to say peaks, but this 32, 35, 38, 40-ish level, right? That's where we really see some tops and bottom, or say bottoms in the market. We're not there yet. I expect, again, if the market pulls in early next week, it may come back a little bit and then maybe shoot higher. Maybe it looks something like, it moved higher, kind of comes back in a little bit, then shoots higher. I'm not saying it's going to get up this high, but it could, right? But, like 40-ish, that's what I kind of expected. So we're not there yet, but it's definitely going in that direction. All right. That's the VIX. Let's talk about bond yields. Again, it hasn't taken out this high yet, but definitely we're seeing an increase in yields moving higher. Again, it may kind of come in just a little bit this week, but then again, something like this, again, doesn't have to go this extreme, but taking out this high, and even if it gets, listen, we've seen in the past, this was 2016 right here, and it got to 1.67. That may be where it ends up, right? Who knows? Back in 2009, it got up here. So it doesn't have to get all the way up here, which was the COVID spike. It was 2008, 2008, 2009, right? So, maybe it gets up to 1.7-ish. Maybe it gets up to 1.67, 1.7, 1.8, and that's fine. But we haven't seen that big spike yet. It's moving in that direction. So this tells me that there's probably more pain ahead of us. I guess that's what I'm getting at, right? More pain ahead of us. Put call ratio, again, moving in the right direction, never got too extreme, right? So it hasn't been too extreme on a closing basis. This is what people are actually doing with their buying puts and selling calls on equity. Right? Buying puts, buying calls. So didn't get too extreme. Again, I would expect maybe to come back in and eventually over the next 4 or 5 weeks, us to reach this area. That's the sign I'm looking for. Again, the VIX spiking to 40-ish or more. The put call ratio getting above 1.4. I'm looking for bond yields to kind of spike into that, 1.7-ish range. Whatever, somewhere around there. Doesn't have to be that exact number, right? I like to see some of those targets and the ETFs start to come into support, right? Or be supported at least, as well as the indexes. Looking at the percent of stocks above the 50-day, right? I mean, huge breadth deterioration. And that kind of makes sense because during the last rally, we basically got above the 50-day, but not by all that much. So this downturn really took the air out of that. And it didn't take much to get it back below the 50-day. And at 11.78, basically 12%. But it's still not in this green area. I think we need a washout. So next week I expect a little comeback and then maybe a washout again. It's the process, could take next 4 weeks, 5 weeks, who knows? But again, that's what I'm looking for. So I think November, December could potentially be really good if we get that type of capitulatory move over the next month or so. I'm just looking at Bitcoin. Bitcoin, good chance we get a flush to this 14,000 level. We'll call it 13,000. Things look very, very weak in Bitcoin too. So that's that. All right, let's put it all together. Let's go back to candles. Things are looking rough out there. Good chance, very good chance we get an early week bounce, maybe a full week bounce. Who knows? But I think that's going to lead into one more leg down. Nothing is saying a bottom is in. Nothing. One more leg down. Hard. Could be anywhere from 10 to 20% down, right? I mean, that's what for me, that's where I'm looking at the next, support trend lines, could be anywhere again from 10 to 20%. So we don't know. Dogs barking like crazy. We don't know what's going to happen, but I would say that if you're in a long position, either hedging or selling or something like that may make sense. Or if we break this low, expect another 10% and say, I have a longer term time frame. I want to hold the next 6 months of this stock and add to it as it goes lower. That's your choice too, right? Depends on your time frame and risk tolerance and everything else. But state of market right now, it's trouble. Again, early week bounce, move lower after that, and be safe out there, right? Take care, guys. And again, at Alpha Trust 365 on Twitter. Hit me up there if you have any questions. Talk to you soon.